Okay, hello traders, and welcome to this live intraday strategy webinar. Today is Thursday, February 20th. Michael Boutros with you on the horn. Great to be with you guys this morning. Hey, Patrick, Ted, Jay, great to see everyone in the room. Good morning to you as well. So, the dollar has just been on a ripper, okay? Lots of setups to go over today. We'll go over all the majors and crude and gold commodities both making some big moves as well. On the menu, DXY, we'll start off with a good look at the dollar, euro, sterling, dollar yen, crude, gold, and then we'll review the previous updates on Aussie, dollar Swiss, which I'm still in, and dollar CAD. Any other questions or trade setups you guys want to review? As always, feel free to throw them on the message board. Let's jump right in. So here's what DXY looked like sort of as we headed into the start of the week. Here's the last update on DXY, was down here. So the major focus on this breakout, well, here's the weekly chart, and here's what the weekly chart looks like right now. The major focus was this pivot at 98.84, into 98.96. We talked about that earlier in the week. It's the high week close from last year. It's the 786 of that decline off last year's high. And in near-term charting, there was a huge pivot there, right? We broke through, and here we are, pips away from the 2017 uncovered close. So this was a gap that we made into the open, or I guess it was mid-April, into the open of the week. Didn't quite fill it, just a couple of pips off. That uncovered close gives you 99.98, just shy of 100. And then above that is a basic 786 of the entire decline off that yearly high, and that's 150, 149. So the levels are clear, okay? This is a breakout any way you slice it. Do not try to get cute on this, guys, until we get some validation on price before we try to fight this in any what way. That momentum trigger that we were watching all throughout last year on all of those divergent marks. And this is a prime example. Anyone who's new to the room here, anyone who's new to studying momentum oscillators, of why divergence in and of itself cannot justify a trade. Here's a divergent signal that happened for pretty much the entire year. Higher high, higher high, higher high, higher high, series of lower highs. There's the trigger break, was validated with an accompanied move in price. All right, so initial immediate focus levels on the upside, 99.98. If we break that 100 mark, 100 spot 49 is going to be a basic 786 of the decline. That's the weekly chart, right, from 1,000 feet up. No change to any of those levels. Here's the daily chart. So interestingly enough, this month has basically seen only 2 down days, and it's the 20th in gold, okay, in the dollar. Here's what the dollar looked like again on the 11th as we were testing that 786 retracement. We've scratched that. We've taken out the high day close, taken out the high close in October open, and we're now up here into the uncovered close again, 99.98. Taken out last year's high already as well. There is nothing to do on the long side of the dollar here if you're not already long. I really want to stress anyone from trying to chase this. If you're holding on, if you're holding positions, again, you're just skimming some off. I wouldn't be exiting either until we get a little bit further up. We're still in overbought condition. The momentum is still in the favor of the bulls at this point. Here's what it looks like at the intraday. What I don't like here is I don't have any slope. Here's the pitchfork that we were working with. I'll zoom this out to a 240. Here's the slope that we were working with from the close of December. The breakout, we worked with this ascending formation. Here was the break, check as support. It's really hairy here, guys, okay? Really hairy. Again, you're in overbought condition. You're seeing some divergence, but nothing justifiable here. So end of the day, keep those lateral levels in focus. I have 100 spot 12, which was a longer dated 100% extension. I don't really want to stress that level, but just the big figure being there is something worth watching. So not much to do here, guys. Like I said, if you're not already in a position, on a pullback, you'd look for initial support along that slope, but this could be pretty mean into the close of the week. So you don't have any event risk on tap. Worth note, biggest major U.S. event risk comes online next week with consumer confidence data. And even that's, ancillary. So we're looking for broader market sentiment to be the driver here. Okay. Any questions on the DXY? The real focus here, guys, is how we close the week and what reaction, if any, do we get off 99.98, that 100 level. So with that in mind, not a very actionable picture of DXY, but that's number one. Here's number two, Euro. And again, this one from the top down looks like this. Here's what the last update for Euro looked like on the 18th. So we were just approaching, or I guess we were just on the weekly basis, we had already broken that 108.53 level. So that's going to be that outside reversal weekly close that we made back in 2016. Major pivot in price, former swing lows, former swing highs, pivot back above. And similar to the DXY, that's the uncovered close at 107.24 is the next level down. So you're looking at the inverse of the DXY. No surprise there, right? Again, here's what it looks like on the longer term, on the weekly. Watch the close. We get a drop down in 107.25, 107.24. Again, I'd be looking for a reaction there. The dominant slope, guys, that we've been following all these years, right through here. Support, 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 converges on that basically into the close of the month. Here's Euro on the daily chart. Oops. Okay, and here's what it looked like. Again, back on the 18th. So that same level is holding. The level that we cited here was 107.75. That is just an eye target from that swing high that we made back in 2017. But if you look at my crosshair to the left, you can see a lot of pivots along that plane. So that converges on the same slope. And again, this is just a parallel of basic trendline resistance, 3-point touch, take a parallel, extend it off the lowest from here, 1 point, 2 point. You call that a third false break. That same slope converges on 107.75, and that's what we've been holding for the last 2 days. So a little bit hairy. The uncovered close is a little bit different from the DXY because it's a little bit lower here. You still got another 50 pips to go on a break lower. But on the initial approach right now, 107.75 is going to be the support you're looking at into the open of US trade today. Hey man, no apologies needed. Great to see you in the room. Says apologies for always being late. Hey, no worries. Always good to see you here. So Euro, okay, I'm stoking out this support. Was tempted to try to take a position against it. I'll show you the Swissy position I'm in. It's basically flat at this point. It is in the money and overnight trade, but decent little pivot. Here's the justification. Here's the Euro on the intraday chart. And this is the same levels that we've been following since the start of the week. Okay, there's that pivot break just below 108.20, 108.14. The downside target 107.75. Literally, we registered a low last night at 107.77. Okay, literally right at the pip. So this is the immediate focus. If we get the downside stretch, exhaustion into 107.25 would be a play I'd be interested in. If you get the pivot back above the weekly opening range highs, 108.50, I think at that point you start to look to play the correction. Okay, but these are trades, guys, you want to be super nimble on. Okay, you're essentially trying to catch a fallen knife, never advisable until we get some justification in near-term price action. So that's my thought process. Don't have anything here on Euro yet. If you're holding shorts, stop against the weekly open is where I'd play it. Next downside target, like I said, 107.25, near-term support, 107.75. Here's Euro on a longer-term view. This is not a pitchfork, guys. This is a slope series all derived by this reference. Parallel, parallel. There's the lower parallel. Questions on Euro? Now, tomorrow you do get the Eurozone Consumer Price Index, expected to come in at 1.4% for the month of January. I mean, it's set as a major market release, but outside of some sort of major deviation from the expectance there, I don't think we'll see much moves, at least off that. All right, questions on Euro. On all of these trades, guys, also keep in mind that you never really got a monthly opening range. Yeah, one-way traffic. Patrick, you took the words right out of my mouth. It's been a one-way trade, right? Sometimes that can be frustrating. Sometimes that can be just the onset of great opportunities to come. So if you missed out on this decline, don't get frustrated. The market will provide, but I just want to stress you against trying to chase this from here. So, we talk about the monthly opening range is breaking. We look for that late month extension, right? What I was saying is we didn't really get a monthly opening range because it's been one-way traffic, but we are heading towards that last final week of the month where markets tend to, there's a likelihood, there's a higher percentage of registered highs and lows. So just watch out and caution against chasing this. There are setups that are way better poised in my opinion. Let's jump to number 3. Eman says true, it's like one-way ticket ripping. Yeah, I mean, the problem, Eman, that a lot of retail traders will fall into is that they'll see this move, and after such magnitude, and basically since the beginning of the year, it hasn't even been just this month, right? You had a couple up days there, but you get those guys that now start to, as soon as we get any type of rebound, they start to pile in, and where we are in trend, that's dangerous to do here, okay? Okay, let's take a look at sterling. It broke lower yesterday. You guys know where we've been standing on sterling. We were looking for some support if this was going to make a move to kind of hold this. Here's sterling on the weekly chart. So the level that we were talking about here for the last couple of weeks has been 129 into 129.21. 129 being that swing low that we made into the close of December. 29.20 being a basic 38.2 of the entire 2019 trading range. And then we have basic slope. This is a parallel, the same dominant pitchfork we've been in since the start, or since last year rather. We came into here a couple weeks ago, closed right below. We rebounded last week, failed at that former slope support resistance, and here's this week again. Now, if we end up closing below these lows, the one-way traffic continues. You're looking for a drop towards 27.54. You're looking for 26.74. I'm really focused on this close this week and how this materializes. There's a lot of things that would suggest you look for a low in sterling, but we did technically register a new low, which was our concern. We got it. So watch this weekly close in relation to 129. Weakness beyond, okay, these lows would have the focus still on a drop towards last year's open. From 1,000 feet up, this is British pound. Okay, here's the daily chart. And I see a couple new names in the room here, guys. Welcome aboard. Just want a quick reminder, if you ever see any of the setups here that don't have an accompanied daily and weekly chart, you can always click on the previous update. I alternate, I tend to stagger them. So every other update will have these daily and weekly charts to give you the multi-time frame approach. But here's what it looked like on the 17th. We were heading into resistance, basic fib resistance. You had the upper parallel, held for a couple of days, downside break. Here we are. 28.23 is your next major support on daily standpoint if we continue lower. Okay, beyond here. I guess that's all to say really here on the daily chart. One other thing I'd note is I'm watching here momentum. Remember the things that we tend to talk about with basic momentum. So in strong uptrends, momentum should find support at or around 40. In strong downtrends, momentum should find resistance at or around 60. So you can see that since basically the start of the year, the momentum oscillator has held 40, 60, 40, 60, 40, 60. Look for a change in that behavior to indicate, again, give us a little bit more of a tell on the on the directional bias here. So here's sterling on the daily chart. Here's the intraday picture. And again, here's what we look like last night. So the focus support was 28.94 is the 29 handle, what we just talked about, right? Didn't hold. Didn't hold. There's the break. Next downside target, like I said, is 28.22. 2019 opens 27.50. Near-term resistance now back at 29. I would leave that open to the parallel here because we've seen some really nice action along this slope. So near-term resistance, I'd probably keep like here to the overnight highs in Asia. See if you get failure there. Bearish invalidation at this point, guys. You want to drop that down to back to 29.20. This is risky. This is risky. Sub 129 for sterling is risky. And for all intents and purposes, one other thing I'd want to note is that here's your February open. So if you were to interpret this as the February opening range into the low that you made back on the 10th, we're basically attempting a break of the objective monthly opening range today. So again, if I were just to take a step back and I was just a sheer opening range player, if we get a close below 128.69, 128.70, it would essentially give you a downside bias heading for a late month low in your sterling. Questions? All right, that is British pound, number 3. Number 4, dollar yen. So here's the abomination. And boy, oh boy, has this thing been a absolute ripper. So I'll take you back to dollar yen on the weekly chart. I posted this weekly chart specifically on Daily FX yesterday, just to show you a lot of the concepts that we review here. Whenever I see examples of them in price action, I get so excited because the more examples I can show you guys, the better I can kind of drill the concepts home. A breach of downslope resistance with this blue pitchfork that we've been following since the highs in 2015, 2017. Okay, on a closed basis, I showed you guys this earlier in the week. It's been rock solid. This was the first attempted break on a weekly close basis to get through that slope. We got it. Now we're gonna see the close, obviously for validation, but we got it. The second thing I wanted to show you is the breach of upslope resistance. Remember, a breach of upslope resistance sometimes is the sharpest part of the rally because the market is already trending higher. A breach of resistance fuels that swing to a more propagated amount. So it literally like starts to build a cascade effect. And here it is. Okay, if you're looking for conviction, I think we got that with the move through the 2019 high week close. 111.50 is what I was warning you guys about on the first breakout. We made quick room of that. And we just sailed right through it. The next major level of resistance that I'm looking for on the lateral level is 112.40, 112.39 into 112.60. Okay, it's a 20 pip range of resistance. There's a lot there though. There's a lot there. It's the 2018 objective yearly open. It's the 786 retracement from the decline, off the 2018 high. We're still trading within that range. 786 is 112.38. And then you have the actual swing high from last year. And the actual swing high registers at 112.40. So a really nice lateral level of significance any way you slice it between 12.40 and 112.60. That's your next weekly resistance targets on the way up here in dollar yen. Now, on the daily chart, looks like this. And again, here's what it looked like yesterday. So there's the weekly. We've broken through this. That's your next major upside. Okay. Here's what the daily looked like last night. There was your first level, 111.58. Okay, that's where we basically tagged and pulled back yesterday. Broke through it again today. Next major upside, you're looking at this slope. Again, the 786 comes in at 112.43. So use your judgment, right? We don't like to, nothing supersedes basic support and resistance, right? We always say that. So while the lateral level is 112.43, I would be mindful of this slope. Now, this slope they see here in red, I wouldn't put too much stock in, but I want to watch it. This is a parallel of the basic support off the yearly lows. So the low that you made last year right here in August, the low that you made just recently here into the start of February, a parallel of that extended off the high from September. Basically looks like pretty darn close to the high day close that we made in April of last year, which was the yearly high day close. HDC, that's high day close, yeah. So right here, look. So here's last year's open. The high, the registered close of that day tends to be important. So you'll see charts, guys, with HDC, WDC, the weekly, or HWC, the high week close, tend to be levels of technical significance. It was the day that the registered high hit in price. The consensus of where that market closes that session tend to be significant. So 112.17, I think we petered out just above that. The high was 112.19, couple pips higher. But this zone right here, if you're gonna get some sort of exhaustion pullback, this is where you want to be on watch. This is where you want to be on watch. Now again, daily momentum's in overbought conditions, right? So the momentum is still in favor of the bulls, but price is at resistance. Ted says, how do we see everyone's questions or comments? Ted, you don't. I tend to read them out loud, so I make sure that everyone's question is read aloud. So I, for privacy reasons, we just to avoid any complications. All right. Hey, thanks. He said you're more than welcome, Ted. So watch this zone of resistance. Here's dollar yen on the intraday. Okay, there's not much slope to work with here. This longer dated slope I don't even have on there. Let me just copy it here just to show you. And then again, that 786 is just higher. So here are the levels I'm looking at. The trade, or as it were, yesterday, what I was kind of trying to put you guys in focus is if we get a pullback from here to the origin of the breakout to 110.77, that key 618 retracement, that upper parallel, that would have been the extension play to try to fade for the next extension move higher. You didn't even get that kickback. I mean, this thing fizzled out right at 111.10. Didn't even make it to the figure before pushing higher, right? Clearly in still side of the bulls, I'm looking for exhaustion into this zone for a near-term setup, maybe into the close of the week. Guys, if you do anything on the other side of this trade, you want to lighten your load as far as the trade size and be super nimble with your entries, right? It's always in favor, best to trade in the direction of the trend, but you guys know me. I'm have no problem taking counter trend trade intraday if we're coming up against some big levels. So a region to look for, possible exhaustion. It's a breakout though, so just know that. Any questions here on dollar yen? I just wanted to highlight these levels because I think if you get extensions into these specific highlighted regions, there might be some play there. But it's a breakout any way you slice it. By the way, this was the largest single day advance, okay? And this is, I love bringing up these technical indicators, these sort of factors that you look at just as a reference point. So last time we got a daily advance of this magnitude was back on August 13th, I believe it was, right here, yep. Look what happened there. The following day, you did see some weakness, but the market registered a new low before turning. That's why on this extension here higher, wouldn't be too surprised if we make another high first before getting a little bit more of a kickback in price. Again, we're in overbought condition on momentum on RSI. Look for that to change before you start to get aggressive on this. Here's the intraday. Nothing really to write home about here. You guys know how I feel about the abomination, but man, the levels are clean. Levels are clean. Excuse me, sorry guys, I've been fighting this cold for like all week here. Relentless bid in dollar yen. It's been coiling for a while, so big move was expected, but does this breakout foretell an acceleration in stocks? I don't want to say foretell is a big word, Pooja, but I don't see why stocks wouldn't go higher. Guys, we'll take a quick segue. Is Pete in the room? Pete, I know you look at the SPX all the time. Um, dollar yen was number 4. We'll just do this as number 5, a quick review. Here's the SPX levels we've been following. Like I don't really see or have a concern for justification for necessarily some sort of corrective move, but it is still looking tired. So this is the same chart, guys. I haven't touched anything on this chart. This is the same chart we've been following basically since the start of the year. So, could we strike a new high? Could we make it for that 34 tag that we were talking about at the upper parallel before we start turning lower? Yeah. I don't know if you want to use dollar yen as sort of that big of a gauge, Pooja. Just don't put too much stock in it. Don't put too much stock in it. It does suggest that there's room, right? That there's room for the stretch. But yeah, I guess you can make the argument that's sort of a possibility. The biggest thing with equities, guys, and broader risk assets and securities in general right now is, unfortunately to say, is this coronavirus thing. And these X factor headlines where we can't trade them. There's no previous data that we can look at. There's no historical precedent that we can look at to kind of gauge what the effect will be. That's why we have to just default to what price is saying. But yeah, even if we were getting acceleration higher, Pooja, in stocks, there's room that still keeps you within the broader trend that we're in. So quick look there, dollar yen. You guys know where I stand on that, but looking to see if we can get that sort of near-term exhaustion just above 112 in the near term. Yeah, I'm thinking longer term, says Pooja. Start of a bubble kinds. I mean, things are stretched already. Yeah, I agree with you on that. Stretched is not even the terminology. I think that's an understatement. Okay, so let's take a quick segue here into the commodities that we went over last night as well. Really big. They're going to be in the headlines, guys, for the next couple of days. Here's number 6, crude, and then we'll hit gold number 7. Here's crude. So we've been looking for the rebound, and it's worked out pretty well. Here's what crude looked like on the 17th, guys, as we were just starting the week, right? We've been following this one throughout the course of the month. We're coming to the objective February monthly opening range highs, the August low day close. We looked for a break above 52.29. That was the level we needed to get to keep the focus higher, targeting 54.35. And ultimately, or 53.16, and ultimately 54.35. Now, we're heading up towards that second target now, but what I wanted to just highlight is the daily chart first, right? Here's the region of resistance we were trading into right into the open of the week. Opening range took place right below that, and then here's the breach that we made yesterday. Okay, next daily target comes up here, right? This whole region. Intraday chart looked like this as we were checking the monthly opening range. And here's what it looks like now. Here's 120. Okay, so we got the breach, or that held actually. We got the pullback. Look where it held support, right at the lower parallel. Perfect bounce. Breakthrough, 52.29. First target. Second target's on tap here, 54.35 on the upside. Now this slope is intact, so if you're holding longs or if you're holding a scalp on this from intraday, don't let this hang you up, guys. Just watch out. This is just a soft target, and the objective January 20th, 29th, excuse me, swing high. So don't get stung on that because of that 20 cent disparity, but you get the picture. You get the picture. So at this point, you're still constructive above 52.29, the same breakout level. Near-term support, I'd be looking initially at the median line because this formation has been very clean. Pitchfork off the lows, right? Here's the 75% line resistance. Resistance, if we get this breach, you're looking again for that upper parallel, the 38.2 of the drop. That gives you like 55, 54 on the upside. So near-term support, and what I want to say is near-term bullish invalidation gets raised now to 52.29. So the only thing that would put this back on the bearish trajectory to be a dip back below the breakout origin, which converges on the parallel here near 52.29. So I think there's a little more upside to go. Again, wouldn't chase if you're not already long, but if you are holding longs, watch 54.35. If you get a pivot there, again, next upside target's 55, 54. No change to any of those levels from Tuesday's update. Any questions on crude prices? All right. Gold. So I'll be putting a piece out on gold on Daily Effects shortly after this webinar. The levels are extraordinary. This thing's ripping. So look, here's what gold looks like on the weekly chart. Next weekly level of significance, and it's not even that big of a major level, but it is a level that we've been watching at 1625. Okay, that's the swing low that we made from back here on this dip in December of 2012. It's slope resistance, so this is the basic parallel, or this basic slope trendline support off the lows. Here's the parallel, breach, support, 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 support. Another parallel extending off that high from April of last year. Just missed right there, right there, right? So long story short, from a weekly standpoint, your next major level is 1625. A breach above that, you're looking for 1700, you're looking for 1733. And if that seems crazy to you guys, when we were talking about 1586 last year, people were calling those crazy, right? A breakout's a breakout. The only thing I'll say is that we're testing, we're going near, we are approaching uptrend resistance. Something to be noteful of as we get towards 1625 on a weekly standpoint. Here's the daily chart. And here's what it looked like last night. So I thought we were going to get some kickback here, 1611, or some sort of reaction. If it pivots higher, the next level up, 1625, is right there. But on a daily standpoint, we've been following this pitchfork. This is off the lows from October, and that secondary low in November. You guys remember we were following this. We got rallying to the median line right into the start of the year. The breach there saw an accelerated rip. We never closed above the upper parallel, and we still haven't. So I'll reserve judgment till today's close. If today's close maxes that parallel, your focus is still 1625 and above. If this were to close back below, that's an exhaustion trade, guys. And again, it's too early to tell, and I don't want everyone to get like overly excited, start looking for the wrong thing. But that's how we gauge a move like this on a day where we're already fueling an extended breakout. So this was the first breakout. It's a breach of the monthly opening range, a breach of the monthly open, a breach of lateral resistance. Objectively, as a first close above, this is your first level. On a closed basis, that's exactly where we closed. So today, the onus is on a close above this region to keep the upside in focus. Okay, the daily chart has soft targets here. past 1625 at 1671, and then 1713 rather is the 764, not the 786. A little bit of a shift there as far as the upside targets, but the immediate focus today is whether we're able to actually close above these levels. Here's the intraday. And here's what the intraday looked like last night. Okay, so 1611, that same level, we tested it again, pulled back. That was our initial support, didn't quite get there. And here's the extension higher. Could this thing pop into 1625 this week, even today? Sure. But again, if it closes back below 1611, I'd get concerned for at least a little bit of a pullback. I think you would get a better entry, actually, if it happens. Pooja saying gold ripping, equities not correcting. Market seems to be brushing off coronavirus. Aussie dollar bounce, sent you my charts. We'll take a look at Aussie dollar for sure. The coronavirus thing, I hate even talking about it because markets will bring that up when the market moves up or moves down. And then when the market's rallying, it's like, oh, we don't care about it. There's not really new developments coming out with that story. So that being said, it is interesting that you're not seeing those kind of move in lockstep. But again, I think a lot of this has to do with, well, first of all, the divergence that you're seeing with just sheer gold strength and dollar strength in and of itself is something remarkable. I always like it's something very interesting whenever that occurs. But the fact that you're seeing both of those rally in not necessarily the strongest risk-off environment is what's interesting to me. So take that for what it's worth, Pooja. Excess liquidity to blame, I guess, possibly. And again, there's not really many games in town, guys. If you're looking for yields, there's, your hands are kind of tied. All right. So any other questions on gold? I'm of the mindset that you do travel higher here, but 1625, the upper parallel, you see some failure. How deep that correction gets is where what my focus is. Okay, so those are the two commodities that we've been tracking. Last three here, Aussie. So yeah, here's Aussie. Will you short from 1625? I wouldn't short on an entry limit there, but I would be looking for exhaustion there, yeah. So you guys know the way I trade. Once price gets into there, we'll jump into a closer time frame chart. If you see some divergence, you see maybe a whip, a long wick tail that closes back below it, it might be a decent fade position for at least to move back to the parallel. But you always want to be precautious about playing a short off of uptrend resistance. You know what I mean? I'd rather play a short off downtrend resistance. But if I'm going to play an uptrend resistance bounce, it's going to be something very half position size. And again, really meticulous on the entries there. But yeah, that would be my first area, E-man, to look at. Aussie. So I don't really have anything to do on this, guys. You know, this is my favorite pair typically to trade. Here's the weekly chart. A 2-point touch trend line. Does that scare you? Should that make you want to limit how much long dollar you want to get with a dollar that's already rallied basically for the entire month? I don't really want to touch Aussie here. It is my favorite asset typically to trade. At these levels, I think you're kind of playing with, I think you're sitting there soaked in gasoline playing with matches, to put things lightly. If this were to break, I mean, the downside implications are massive. Multi-year lows, a break of last year's opening range low or last year's range lows, a break of the range lows that you made, or huge pivots in price. The weekly chart has me shook, right? The weekly chart has me shook. Here's what it looks like on the daily. Again, that same trend line from the January lows of last year, August lows, we're right there. Just a little bit lower if you follow the pitchfork that we've been in off the highs that we've been following here, the median line. So like maybe I'm overdoing it, maybe I'm overanalyzing it, but I don't have a trade here. I don't have a trade here. On its face value, guys, this is a monthly opening range break lower, which gives you a short bias looking for a late month low, right? Well, what am I going to do? Sell into support? There's not much I can get sort of excited about here, even on the intraday chart. Remember this really near-term channel? I was telling you guys since the start of the year, it's ridiculous how clean it's been, and it still is in play. Here's what it looks like. Even a bisector, right? Really nice pivots. What do you want to do with that? You know what I mean? So look, for me, Aussie is a no touch here. If it were to rally towards 66.70 E-man and hold, or who was asking about this earlier? Puja, if we were to rally towards 66.70 or even slope resistance and hold, I'd be looking to play a short, against the weekly high, looking for the parallels. There's not even lateral levels until you get down a couple of hundred pips. If it closes northbound of 66.70, that would be an exhaustion trade in my mind. With where the dollar is trading, with where everything's trading, I'd be looking to play the breakout of this descending channel. That's just me. But guys, this could go either way, and I'm not just playing both sides of my mouth here. Aussie's really in a precarious situation. I think this pivot's huge. If this really is a legit break and you get the first daily close below this level, the 2008 low week close, I mean, we're going back, over 10 years here, then the implications for, serious Aussie losses are there. So another one, unfortunately, kind of a wait and see on this one. We'll get it. What is this? The 6-day decline now? 1, 2, 3, 4. Yes, the 6th consecutive day decline. The last time we saw that was right here. You got 7-day decline. That's a 1-day reprieve before moving lower. Here's another 6-day decline. Again, 1-day reprieve, or even a 3-day, 2-day reprieve before moving lower. You get the picture. And not the time to start pressing it. All right, that is number 8. Number 9, dollar Swiss. Quick look at the Swissy. So I'm still trading this one, but it was kind of a gutsy hold. Here's what it looks like right now. So well, let me take a step back. Sorry, guys. Here's the weekly chart. I like to do the top-down approach to give you an idea of where we are. Here's why we start to look at the short to begin with. I showed you guys this earlier in the week. 98.20, 98.36. That's the 2019 objective yearly open. You guys know I love using yearly opens. Objective lateral levels that are not debatable. They're fact. Last year's open offered a decent pivot in price. Here's a 50% retracement decline off the highs you made in September. Nice pivot zone, right? So from the weekly standpoint, you're coming in some initial resistance. All right, cool. Here's the daily. Again, that old open, you can see how many pivots we've seen along that region. Right now, price is poised to make an outside, reversal candle off that region. I had a stop on this one, guys, literally at 50. Like I was 2 pips shy of being stopped out, so I'm lucky. Still in it, just looking for a near-term pullback on this one. A little bit more stretch with momentum still holding essentially that 60 zone. Here's the intraday chart. So the upslope that we've been following off the lows. Here's the last update here on Swissy. okay? So we were looking for this thing to kind of peter out, upper parallel. You saw some divergence continuing to mount. Even on the near term, there was actually an hourly trigger that gave out. Took the short, stop against the high around 50. Again, just missed it on that last one, an overnight trade. This is the first level of interest as support. So it's a tight scalp just into 98.15, took a quarter off. I haven't gone break even yet. I typically would at this point, and I probably will. But if we get a break of the median line, your next upside or your next downside target is down here. I would be mindful of the weekly opening range low, maybe shave off a little bit if you get a tag of 98, 97, 96 is going to be the actual objective monthly range low. But this is the bigger support, which I'd look to do a little bit more here. Also want to highlight that this is the weekly open, which is why we had that highlighted level there on that slope. Okay. So just looking for the pullback. You know, ultimately, if this thing is going to really show a legitimate breakout of this descending formation, losses should be limited sort of to this region here, and you'd look for an extension to 98.70 eventually. But an outside day reversal does bode well at the highs for a near-term pullback in price. Initially into the US Open, look for a buckle below this, a break below the weekly opening range. That would give us sort of a validated short side bias for a near-term pullback. So let's see how this Swissy plays out. It's a slow burner, guys. The the ATR on this one's tight, so your ranges are not going to be that big. But I just love the formation. I think it's really clean on the near term. Questions, comments? Oops. Quick adjustment there for the new high that we made in price, guys. Questions, comments, concerns on dollar Swiss. No change except for the new high that we just registered. So shift that retracement gives you another 4 pip move here to the upside in the retracement. Okay, and last but not least is dollar CAD. Here's Looney. So she's a sneaky little trader. The bottom line is I didn't have this level on here, guys, because I didn't want to clutter up the chart on my last update for dollar CAD with you guys, which was, if I'm not mistaken, on the 17th. Yes. So here's what it looked like. And we were coming to that initial support to start the week, right? 32.71 is what we wanted to see hold resistance. We rallied right into that level. It held. There's the downside break. There's the first target we were looking for at 31.85. Didn't get it. Okay. On that swing off support from here, an extension gave us a 618 here at 32.15, and that held an overnight trade. So look, for dollar CAD, this thing is the king of the fake out. All I want to say is it's a very clear-cut weekly opening range. You're essentially unchanged on the week. If this were to close right here, guys, we made a doji, a weekly doji. So use that. Use that. Use that range break to give you guidance. The top side breach, you're looking for 33.30, 33.35. That's still the major resistance we turned from last week. A downside break, we're looking for that continuation, and this was the support target we were looking for in that break that we didn't get, 31.75, 31.85. I don't have any exposure on this right now, but put a gunshot to my head. I would like to fade a move into 31.85 if we get a drop towards here. Certainly failure at the opening range high of the week would be a decent position on a short to try to play that move, but it's a range. Until we clear it, respect it. All right, and that's everything I have. Any other questions or trade setups, do feel free to let me know. Throw them on the message board. If not, we will go ahead and wrap things up here. Again, event risk, guys, into, even to next week. I was doing the calendar. There's not much there to go on. So just keep your eye on price action and broader risk appetite. The levels that you want to continue to focus on are sort of those breakout trades that we presented in last night's update, because a lot of those are sort of stretching some nice regions. So keep an eye on that, and we will keep you updated on the SB Squawk. Don't forget, Jamie will be up later with the midweek strategy webinar. Hey, thanks, Patrick, Pooja, Pete, Eman. Thanks, same to you guys. Have a great weekend. I'll see you on Monday on Daily Effects for the free session, and then right back here on SB Tuesday and Thursday. Best of luck trading, guys. Cheers.